I forgot to record, so I'm going to redo the analysis. What I was saying is on the hourly chart here, you can see that this was a range. It broke out, came back down, and then bounced up. This is another part of the range, so it's basically stair step right now as far as our market. So it should break up here. So on the 1 or 15 here, should go to the top. And we can tell if this cannot break down right there, so we'll continue. So it's go to 1 second attempt, might might come down something like that. But right now this is continuation up, so I'm going to add a little bit heavier. So I'm not that heavy at all if you think about it, and very light because I'm in 2 lots out of 50, which is really nothing. It's like 0.025. So staying light at the top, but once this breaks right here, then we'll go heavier. What we'll do is, oh, that one doesn't show so well. So this basically, once it breaks like this, here's the next one. So we go like a diamond. We want to get heavier. So we go like, here's light because it could turn, then it breaks, goes normal to heavy. And then we want to come back to light because then it usually comes back to retest the break. So if it breaks up, it usually does this. And then it might go like this. Hopefully that makes sense. Any questions so far? All right, so you can start seeing it stalling. And a little bit early though, we've got 40 more seconds left. So I don't want to start selling yet. If it breaks this, it, 5, it's kind of small. It's probably coming down to here, 50%. You see wicks up, 20 seconds left. So the body is closing above so far. Oh, we have 4 minutes on the 5. Starting to break down a little bit, wicking, but then it just pops up. So I added 1, kind of like wobbling out of this in case it drops. Doesn't look like it's coming back up. So we're gonna basically start hedging into it and selling into it. So this is basically the stall on the 5 right here. I mean, we're 3 minutes though, but I think it wants to come down. So I'm gonna add heavier sell. It's flickering down as far as sells. So anytime the market comes like this and it flickers, usually it's going to continue. So as it wants to pop up, somebody is pushing it down. That's why it's flickering. So right now I'm in 1, 2, 3, 4, 5. 1, 2, 3, 4. Okay, so now I'm in 5 cells, I think. I think some of them TP'd because I'm only 4. Oh, never mind. Didn't add. Why is it not adding? Oh, it did add. Okay, so basically equal buys and sells. So as it comes down, I'll profit and sells like that. And then what I'm looking for is the body of this candle. So right here. So you can see the targets above it, and then it probably stops somewhere right here, since this is pretty close. It's having a hard time going down though. It's not passing this right there, body of that. So these cells could lose. So I'm prepared to just close sales and then go heavier on buys with the pop up. But right now it is poking its head down. As you can see it on the 5 right here, it's slightly below. So this is basically the end of the price cycle because you got 1, 2 like this, and then it comes back like this. It should come back to here. So it just really slow right now. I thought it would market would increase in volatility with the 8 o'clock, and I guess it did because right here was the move. That was the 8 o'clock central, right? And then now it's 8:30, which slows down. So the next time the volatility will come in will be at 9, which is about 40 minutes. There's a lot of flickering right here. Since it can't go down, then it'll probably go up. There we go. On the 5, it closed down. So we're looking if this one will follow through. And the danger sign will be here. That's the first, the warning sign. The danger sign is right here. And then this is the turn. So that's your 1, 2, 3s as far as structures. The warning sign is this one right here, which is right here. There it is. And then I'm going to buy into it. 1, 2, 3, 4. Just to match. So I have 4 at the top, 4 at the bottom, 2 layers. But I don't know if this is going to turn right here because next danger sign, the real one, is going to be right here, which is right here. Okay, and then the turn, like, hey, we're no longer going up. It's going to be right here. Hopefully that made sense. And the orange line, I think I actually drew it differently. I think it's this one actually. All right, see that? It's bouncing up. So this is a great sign for buys because it closed. It hasn't closed yet, but it's about to because it's only like 10 seconds and it's popping up. So it needs to break this one, the 50%, to continue up. But you can see I'm net profitable because these top ones are losing a small amount, whereas I'm gaining big time. So really, I could have added more here, but I just didn't know the market was going to drop further. So I didn't add more. So this right now is pausing. What I'm watching for is it will it gonna stall and basically start coming back like this? Because if it comes down up like this, it starts coming down. Usually wants to go down more. Like that, see? So in that case, I'm gonna close my profitable buys. Okay, I'm gonna leave the top ones because I think the structure still goes up. But I'm not gonna sell into it. 1, 2, 3, 4, 5. Basically, that's a hedge. But now I put on more sells than I do buys. See that? So as the market goes down, rather than going minus, I should go being plus. As far as the equity here. See that? It's going up now, starting to go up. Okay. It has not broken this yet, but there's a high chance it will come to here. So what I'm going to do is add some more TP cells. The ones right here above the body are great. The ones below it, I'm going to drag down to the 5 minute, or actually the 1 minute. So if you look, the 1 minute right here, the close of this is also above this body. And now it's negating. So basically I'm about to lose in cells. So close my cells here, and I'm gonna flip the buys. Go heavier here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. The reason I flipped is because it was this pattern is supposed to come down, but when it comes up like this is a rejection pattern. So it's a double rejection, and a double rejection is stronger than the rejection, of course. Okay. And sometimes you get a rejection times 3, which is, hey, we're going back up, and nope, we're not, and then boom. But right now the buying pressure is pretty strong. You can see on the hour, the last hour has been up. So usually what happens is when you get an up candle like this, especially because it closed above, it usually follows through for 1, 2, 3, 4, 5, 6 hours. So right now the drift, the Tokyo drift is up. There you go. You see it's about to go up. So what I'm doing now, I'm gonna, because it's doing that, I'm gonna add more to my buys right here as a high probability, and pay for my losses. Bam. Look at that, guys. I just profited. See that? Net profit. So it didn't matter if I lost, because I was like, I don't know what the market is doing. I'm just playing the candles. And this being a W should break right here. So I already reached almost 1%. Okay. Now this is a pausing pattern because it comes up and it kind of barely comes back like this. It stays above 50%, doesn't pause. If it comes down to here, I'm going to exit my buys. It might be a slight loss. It's okay. Net wise, I want to make sure I'm profitable. Because if it does come down, it could be a major rejection. And then what you have is return to the bottom of the range. Because if you look, this is 50%. If it cannot break 50% right here, it wants to go down. Does that make sense? So it really has to break this 50% to go up. It has to break this level for sure to go up. So this right here, it has to break this. So for structures as far as buys, it's this right here. This is the break where it turns up. This is your first clue. And then this right here was your danger. Hey, we're about to turn up. See that pulls down? So this is where I just close my profitable. I don't want to risk it. And with that, I'm actually very close to 1%. 1% right now for me is 55.553. And look where I'm at. I'm only $100 off, which is basically a 0.02, I think. So I'm like 0.98% or something like that right now. And how long did it take me? Only, I don't know, 10 minutes, 15 minutes for 1% ish. Now, this one, what I'm watching for is will it stay below, or sorry, will it stay above 50% of this 1 minute candle, or will it drop below it? And right now it's staying above it. So I'm going to buy at the top. This is a risky move, but it's a breakout move. Okay, so I don't want to be too heavy. I'm 0.6 or 6 out of 50. You know, here 6.5 out of 50. But I want to put on some zero TPs to ride the weight up. So right now I'll take 8 out of 50. This again, we're at the top, but there it is. It pops. It's only because I saw this move right here. Okay, so it's not really bad PTP because it's after the pullback and it's confirmation. If it was here, it would have been bad PTP, bad entry. PTP being a proper trade placement. Okay, and there we go. See, now I TP on it. And what I want to do is do a diamond like this. So as it pulls back like this, I'm going to add heavier and then get out of my trade by that next action point, which means when it comes to here, the market will either come back, continue, or reverse pullback. And that's where you get in, get out, or hold. So that's what an action point is. So here, all my trades should take profit. So where I basically get out before then. And what I want to do is, does it show? So let me move this. I want to move these up a little bit just to make a little bit of extra profit. This. And notice where I put my my targets. It's below the last 5 right here, strong 5, and basically it's well below the top of this range. Okay, there's a retest of the pivot. That's expected. So I'm going to add. And this is a high probability trade right here for the buys. Because right now we're in a trending market. Okay, so basically it comes back to the break to retest. It should bounce up. So there was 2 probably high probability trades, which is when it pops out of the range, it comes back to retest the break. That's one, and then the next is right here. So there's 2 high probability trades. I didn't take the sell because I didn't see how far it would be as far as that 2 TPs, but I took the buys. Okay, so now this is where I want to be a bit heavier because now I'm 36 out of 50. Why? Because it's a high probability trade. So if I'm 25 out of 50, that's heavy. I'm in 36, which is super heavy. If it doesn't work though, I have to get out. So this right here is the last of where I get out. And basically I have to start selling because you see if it doesn't hold above this level, it wants to break right here. That's your danger. this is like your danger right here, and then this is where it turns. So warning sign is if it comes down to the yellow right here. So as long as it stays above this, we're good. We're like in the green light right here. So right now I'm risking profit because I started at, well, basically I'm profitable again. At some point I was actually in a drawdown, 51-ish or something like that. I didn't pay attention to what my drawdown was. All right, there you go. I'm past 1%. And how long did it take me? It really just didn't take me that long. Maybe 15. So 1, 2, 3, 4. So let's just say 20 minutes, 15 to 20 minutes, and 1%, which is around bucks. Now that's not good. That's coming down again like this. So now here, the warning sign will be right here. Okay, right here. And the danger sign will be here. Why? Because here's your support action point wise, it should bounce. But if it comes out here and wants to turn the market, that's the last shot, and then your market will turn right here. So those are your warning signs. Oops. I'm gonna leave it on for you guys to see. So what's happening is it's forming the wedge. It comes like this, forms a wedge. It usually comes back down. So right now there's danger of being what's called an ankle slapper. Breaks out and then it just fakes out. And if it does, there's a high chance it wants to turn the market because this was up or it was down 50%, now it came up 50%. Sorry, it went down, came up 50%, and if it fails this, then it wants to come down at least to here again. So that's the danger right now. There was a high probability of a pop-up, but now this candle it's changing the picture. It hasn't turned the market yet, but this is a warning sign right now. Oh, and then it's like, hey, let me start to mitigate some of my, gonna, peel off some, which is what I was about to do, but like some of these semi-profitable ones. I don't want to start selling right here because it hasn't broken. There you go. So you see that it wicked. It came down and wicked and now it's up. So with this candle now, there's a higher chance of it popping up because it's negating the down move. So basically what happened is it goes up, then you got your rejection, and now you're getting your double rejection. You see that? It's now even a stronger candle. And on the 5 right here, this is a great continuation pattern right here because it has wicks on the bottom. So I'm holding my buys because of this. It needs to break that candle though. It needs to break this, and it should, because you see here on the 15, on the 5, everything right now is a continuation pattern. And so here, if I don't like it, risk-wise, I can just get out right here because I'm net profit. But in this case, it's holding. So I'm just gonna wait. Yeah, I run the risk of taking a loss. But I can fix it because how easily did I make 1%, in 15 minutes? So you got 1 more minute, 55 seconds, that is. And what you want to watch for is the body. So as long as the body goes up, so here's your body, your big one. This one, the body is up. This next one, the body is higher. You're making a higher high, and basically it's a higher low kind of thing. Then it's a continuation up. But if this body is an inside candle, so it's like this, and then you got an inside candle, it invites the cells to come into the market. You see here it's popping up, and you got 20 seconds here. There's a great sign that the next candle is going to pop up, and then all of these with TP. Here are 5 seconds, and then now, boom, I'm about to hit all of my targets and basically return back to a normal position, light position. So again, I was light, heavy, and then once it comes up to here, I'm back to light. I want to stay light because it could turn. Okay, so the market right there popped up. Now this candle is not good, but it could be just a doji because we're early. So now the warning sign on the 1 would be, it's still that one, but really the earliest warning sign is here, right there. So not that good that it popped up, but wicking down. And your warning sign is right here. It moves with the market, okay? Because if it comes down below that body, that's like, hey, I'm stalling. But if it continues to go up, it's just a stair step going up, stair step. Hopefully I'm not confusing you guys, but it's clear and this is good information. And I think I TP'd on some of them because I was heavier. Remember, I was at, oops, let me change colors. Earlier, I was at 36, remember? So I was from 25 to 36, super heavy, and now I'm 12. 12 out of 50 is still my light. Is if you do the math, 12 divided by 50 it's 24%. So it's 20% is my light. So I'm right in the normal, light to normal range. And I can afford to take a small loss, like 100 or 50 bucks or something like that, because I already made my 1%. So what I'm risking here is profit. It's a small risk to reward. So I have a very small risk, which is, like, hey, 50 bucks. If it pops up, I have like 150 bucks, bigger reward. So my small risk is minus 50 or minus 100 bucks. I'm not gonna leave these trades on and let it go like this, because then I would lose like 500 bucks. That's stupid. Does it make sense? So there we go on the two, sorry, on the 1 minute. Now this is a great sign right here. You see that? It was coming down and then now it's wicking. Okay, so this should continue up. And now I'm less worried because if you look, I'm in profit. So if I cut it right here, you know, peel off kind of thing, well, I can reduce my risk. So I can sort like this, and these top trades I could just peel off like this, bam, and then all of my trades are now profitable. There's more leeway, and I'm back to light. And so if it does pop, I just make more profit. But if it stalls, I get out at lesser profits. But now there's no loss because the set of trades that I took off was net profitable. Does that make sense? So here, what I can do, I can secure my trades. I got 3 of them. And I can secure them right here. So even if it wicks down, I'm okay. I got profit. Or, you know, worst case, it's just break even. But the point is not, there's no loss. And right now it's just a slow drifting stair step market that's just doing, you know, down, you know, like this, coming back some, up, coming back some, up, coming. So it's just slow stair stepping market. There it goes, boom, pop, and so I'm out. But that basically might be it, where sales wants to come into the market. Okay, so what I'm watching for now is where does the body close? But I have 4 minutes. So if this is coming down like this, and then suddenly the next thing you see is it pops up, then that's a great sign it wants to continue up. So right here, it closed below, so that's a warning sign. On the 1, it's this right here, because there's the last support and resistance. If it comes below that, then the up wave has ended. See, so it's negating it right now, but it has to break this 50%. So if it comes down like this and comes up and then stops, then it drops. Kind of flickering right now, so it should continue. It's kind of like pausing and flickering. So what I'm going to do is I'm going to put a light buy at the top. It's just one buy because this buy could lose. I'm waiting for the next follow through to tell me, will the market go down or up? Do I know any other traders that trade like me that I learned from them? Not really, because Sean is a counter trader. David is also a counter trader, but by watching them, those two talk about the prices, you know, if this does that, you know, they talked about price action. Okay. And the trader that I had learned from before them was a guy. He has his screen name was Heiken Ashi Trader. He's a German trader, but he basically is talking about price action. Watching the 5 minute. Um, he uses more like the hour though, where basically your average has a strong buy, or versus a weak buy. Um, Strong sales, things like that, right? So that's where I first kind of got into this was uh, using Heiken Ashi. Then after a while, using this and seeing it, so seeing price action from what Sean and David talked about, plus what I learned from Heiken Ashi trader, I basically learned to read the market, and I learned to recognize when the turns happen, because that's where I kept failing the trades. Okay, because I would um, basically say, hey, you know what? This is going up. Uh, Let me load heavy. So I'm loading heavy at the top, and then suddenly the next thing is, oh crap, the market dropped, and then I'm taking big loss. So I watched my failures and where it was failing, and then I started noticing the warning signs. Like, hey, basing on the body close, because Sean and David talks about it. It's not so much the wick, it's the body close. If it closes below this, it goes that way. If it does this, it does that. So that's kind of where I learned it is watching and listening to what um, David and Sean talk about. I don't trade the same way they do, but I can recognize the same things they do. I'm too fast. Well, it's a scalper. This is a scalping trading. I'm a sniper. So my style is a sniper and scalping. I got into it basically with, again, Heiken Ashley Trader and then Sean and David. So I really like that style. And I am faster, yes, because I watch videos fast. Like when I watch YouTube videos, I watch it at 2x. Okay, when I'm doing the simulator, um, the one like if you put it at the very start, it's 4 times faster because it only does your high, open, low, and close. So 4 times faster, but I have it on the fourth notch or fifth notch. So technically, when I'm simulating, I am 10 times faster. So the first time when I was like, I'm profiting in simulator. Why can't I profit in real life? It's because the impatience, the speed was not there. Um, but I got used to it now. So I'm much more patient now in the market. But you just see that I missed my target. I thought I hit. What the heck? Why is it not? It is there. Oh, these are zero TPs. That's why. My two TPs hit, and my zero TPs are still on, and it's light because it's at the top, which um, again, it could turn at any moment with this candle now. So right here, this is your warning sign. If it drops below this, it wants to turn. This is really where it will start turning. This is the danger zone. And then let me draw that again. And right here is when it will really turn the market. Because if you really watch this, this up move, this is 50%. So if market comes down to here and bounces, it's still up. But if it breaks below this, that's when it has turned. Okay, right now this is a continuation pattern up. So what I'm going to do is I'm going to add some sell scalps, or sorry, buy scalps for the top here. But I only added 2, which is small. It's on the 5, this is not a good sign because look, this wicks on top. You know, this has come down and then has not passed 50%, and this is actually wicked down. So sales could actually be coming in right now. But we have 50 something seconds left. So this is a rejection basically, because what happens is it went down, went up. So this is a rejection. And then now if it's going down again, it's a double rejection. And if it goes up again, it's a triple rejection. So the last one is the strongest, and that's a triple rejection right there. But we have 30 more seconds. Now the rejection on a 5 is much better. The 1, sometimes it's not enough time. So right now the market says, nope, we're not going down. I want to push it up because this bar right here turned back green, even though there's doji at the top. So the selling pressure. So buys has not won yet. It has to break this candle to win, which means once it does that, it should come up to the next action point here. Does that make sense? But right now, you see cells are starting to win. It's starting to form this, which tends to drop. So this is where I do bad PTPs on purpose. It is my style. It's different from David, because if my buys lose at the top, that's my cue that I need to start flipping to sells. So I use it. I take a small loss as a cue. Okay. So it is my style. That's funny, Jason. You need an ice cream? That's what my kids would say. Does JP or does yen drift like this at night mostly? Yeah, pretty much every pair drifts at night. Now, yen right now is the yen session. This is like US session. So it might drift, but you can see there's still a lot of volatility. So at night, yen moves much better than Euro USD. In the mornings, though, Euro USD seems to move better, but sometimes USD yen moves more. Just kind of depends on the market sometimes. Like I think I was on Monday or on Tuesday, Euro USD had like 30 pips waves, and USD yen had like 10. So, and that was in the morning session, okay? But at night, it's the reverse. Yen is like this, and then Euro USD is like this. So there's times to certain pairs, and it's based on the market, just the session that is. So since this has yen, and you know it's the Japan session right now, their major morning, it moves a lot. Right now it's not moving, correct. It's just drifting. In 2 minutes though, at the hour, it will tend to move. So right here, what I want to do, I'm actually going to exit these sell or buys, because what happens at the hour is volatility spikes up and usually it reverses. So if this is going up like this, the hour might pull back, or it just might like that continue. But based on this candle right here for buys, it's not a good sign because it came down up 50% and it's coming back down. So that's why I just like, nope, I don't want to risk it. Let me just close my losing buys and let's be ready for sells. And again, I didn't lose that much because I'm still over 1%. I risked like 0.01%, like $20. So it's like 0.005 really. I really don't want to enter the market and sells unless it crosses this. The body is right here for the warning sign, but if it crosses and closes below this, then I want to start entering sells. Because what's likely to happen is it comes to here and maybe turn the market. Okay, so I've seen it before where it comes and does this, and then it just bounces up. It gets rejected. But this is what I was talking about. See, it went up, down, wants to come down. But it has not turned the market. Okay, this is the warning sign because you can see it broke below. It has not turned the market. The market turns right here. The first danger signs of it turning is when it comes back into this range. And it really turns as far as the confirmation right here. So those are your warning signs. And right now, if you're selling right here, it's a bad move because we're right on top of the pivots, which is support. You see, pivots, pivots. This is a support level now. That's why I don't want to sell right here unless it breaks below here and there's a higher chance of it going to right here. Does that make sense? And right now, if you draw the trend line, it's right at it. So it could break right here. If it holds, then we're going up. What you're starting to see though on the 15, if you look at this body close, it was lower. The body close is lower, which means it invites sells to come into the market. So the next candles could be going down like this, at least to here. But look at that, it's popping up though. See, so I'm watching this right now and saying, hey, it's popping up, it's popping its head up. This is the rejection of the down, but will it get double rejected, which means, hey, I'm going down, I'm going up as far as the rejection, and then I get a double rejection and it drops. Okay. So this right now is being rejected, and it has to pass this 50% to go up, which is the same thing as this body right here. If you look, if you draw it for the ups, it has to pass the last body, just right here. That's your warning sign that, nope, we're not dropping, we're going up. This is like a flag or a pennant. It's just a very small one. It's a nasty one. Now it did not close above the body. You see how it's wicking, and then it's with 2 minutes though. If it closes at the body, then it's the next candle. But if it closes below the body, it's likely to drop. So what I'm watching for right now, it's not the 1, but I'm watching the 5. This candle. See, it's dojing down right there. That's saying, hey, look, we're going up. That's the rejection. And then, nope, we're going down, double rejection. But if it closes like this, right at the body, then it invites bulls, buys to come back into the market. So there's a lot of waiting now. In the past, I would put on trades just because I would be impatient. Now I'm like, nope, it's risky. I'd rather just wait and take the higher probability that if this closes up, the higher probability, is up. But if this closes down, the higher probability is down. So I'm waiting and letting the market tell me what direction it wants to move. Right now on the 1, this is kind of a flickering. It's going up and flickering. So it wants to push up. 10 seconds here, and then it's right at the body. But you see how hard it's struggling? It's flickering because there's equal buying and selling pressure. As people buy, someone is selling. And right now, look at that, it's flickering down. So it's like, nope, I haven't decided yet. I have not broken anything. So I'm watching now the next candle. And now, right now, it's flickering up, which means the buys are starting to win over the sells. But will it early? I'm waiting now 35 seconds. Because if this next candle closes above, we're going up. See, it's wicking right now. That's a wick. It has not closed. So this is like the rejection, right? It's going down, I'm rejecting it, going up, and then if it pushes down right here, it's a double rejection. See that it wicked, but it's closing above on the 1 minute right there. So this is saying, oh, buyers are starting to win, so let me buy into this. And I'm buying light, but on, again, my buys. And if you really think about it, this is the same level that I put my previous buys. It's just the risk is less now. Because earlier, when my buys were here, there was a high risk, it was dropping. Now that I put it here, there's a lesser risk because it already came back, that's the pullback, and now it's being rejected and not getting double rejected. There you go. See, I'm profitable and I should be able to pay for the losses. So what I'm watching for now next is it closes above this. If it closes above this, then I add back my buys for a normal to heavy position. So like right now, I'm super light. I'm less than, I think 10 is the ratio. 25 here is heavy. 2. I'm super light. I'm in a bus route right now because it still can turn back. There's a double top. It comes up like this, can't break, double top, and it drops. So I'm watching for this. Will it break above right here? Because if it does, we're probably going to this level. This one's an easier one to reach. And right now the market is so slow. Flickering right there, so it should continue up because it went up, flickering. I'm just gonna add one more buy. It didn't, or did it add? Yeah, it did. And the reason I added one more buy is because this right here, it's closing strong and you got 30 seconds left. And when this pullback stayed above the break right here. But again, it could very much turn and say, hey, look, because I could not even come back and touch the pivot, rejection, and then drop. Okay. As far as this pivot right here, you know, here's the second one. It's a lower high. See that? It's coming in. And now this candle, because this is a doji, is being rejected here. But really, because it's a doji, and it's a doji up, I think it's going to continue up. So I'm going to add back into the buys. Oh, and this is a wobble to where the bottom buys should pay for these top buys as losing if it pops up. Now, if this next candle drops, then this is where it's like, oh, I lost again in buys. We're definitely going to sells now because this was the move up, got rejected, and then what you have is basically the M forming. Went up, down, up, and then it's going down again, you know. But so same thing as far as the lower high though. If it comes down and here's the last pivot and the body closes above, the M just got rejected, and you have the W. Okay, so right now this is, even though you have wicks on top, the body close is going up. It's stair stepping up. But we have 3 minutes. See that? So this one right now, sales are trying to push it down and reject the up move. But the buy is stronger at the moment. And it's just really, really slow. I was trying to go for 2%, but it's like I made 1% in like 20 minutes, and now it's going to take me like an hour to make another 1%. It's just drifting like slow. It's like, oh. See, that's popping its head up. And it has to close right here. It has to close above that body. If it closes at it, then it might follow through. You see that? It went up, it wicked up. It's a great sign. So I TP'd. Again, I'm very light. So my profits, you know, banked them. 55.9, I'm close to 2%. 2% for me is it's 56. 08, 80. So it closed above, or actually it's right at the pivot. So it hasn't broken the pivot yet. Okay, so this could be a double top and it drops. But what I want you guys to realize is David talks about plan A and plan B. You know, what are the buyers trying to do and what are the sellers trying to do? If you can consider both sides of the market, you're going to be in much better position. So right here, you know, buys wants this to be the W and pop up, sellers wants this to be the M and drop. Okay, now this is a pausing pattern right here because it's not moving at all. So I'm going to put on some buys. So when it pops up and it doesn't drop, it says there's no one selling. So it should continue up. That's why I add 2 buys there. It has not closed above just yet. Once it closes above and pulls back is when I load heavier. See, sales is coming in right there, but it not doing much. This is a pausing pattern. So what I'm watching for is now on the 1 right here. It went up, coming down a little bit, but it's not even 50%, which is a pausing pattern, and it continues up. But it's pretty much the same layer, same level, same layer. So I'm not adding anything right here. If it moved a little bit more, I would add. You guys see that? It went up, down a little bit, and now coming up. The next candle should pop up like this. $20 though. And the reason why I'm not adding is so that I can make sure this, you see that net is small loss or net profit. Right now I don't have enough on the lower level to pay for the top level, but I could get out right here and break even and take no loss. So that's why I didn't add too many at the top. And so what if I lost, you know, $1, $5, $10? It really means nothing on a $55,000 account. But I'm not afraid to take losses, which I know a lot of traders are. For me, I'll take the small losses to help me stay in sync with the market. My goodness, it's not popping. I just need a little bit of pop to make 2% and be done. There it is. All right, and now here it reached the action point right there. So I actually want to secure my trades. Right here, the action point. What I'm watching for is will it pull back some? So it's not pulling back. This is where David will ding me and say, you got to be patient. You got to be patient. It's kind of pausing. So I'm just going to add a light like this, saying this is more of a test trade. Because I wanted to test and see where this TP was. Okay, it wasn't so much a bad trade. It was more of a, like I said, test just to see, am I below the pivot there? Let me try to show you. So see here, it's below the body, which means it's great TP. So if it goes up, I'm not gonna add, but if it pulls back, I know I'm safe to add. That's why I put a test trade right there. So right now, if this is profitable, I won't add. I miss my opportunity. But if this goes negative, I know I can add right here and build a position safely with 2 TPs. Now, if it breaks this, then I can add safely to here because this is now your next resistance. And if it breaks this level, you're now your next level. See, it's breaking the TP, and if anything, I can secure my trades. And actually, I think I reached my goal. 2%. No, I have 80 more bucks. So 56, but I have 80 bucks to go. For a pullback, if there's a slight pullback like this, I'm gonna exit as a ride the wave exit. I really don't want to sell into it because I don't know how far the sell will go. But usually because this is the range, you see that it was here, 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 and then broke out. This is the range. It usually comes back to test the range. And if I sell, I'm gonna put a sell. I really don't want to sell, but I'm trying to execute range trading. And see the 2 TP is not in a great place. I put the sell here and the target was here. That would have been better because it might just come to here and stop. See that it's wicking. And what I do then is I'm gonna close the cells and I just add one more buy right here. And this is just, again, just a test buy. Ugh, it wicked down and then I add it and then wicked up. That's the slippage right there. I was trying to measure if this was here, would the TP be right there? But so far we're okay. This pattern is a continuation pattern, and it broke 50%. So I'm gonna add a little bit heavier right there. But I only had one trade. This is my 3x trade. So this is like saying I added 3 trades. So right now I'm basically equivalent of 5. But again, it's super light because I'm light at the top. Is what I'm waiting for is will it come back and retest the break? It kind of did once. Sometimes it does it twice. So basically what happens is the range, it breaks out of a range and then it forms a second range. So it comes back, comes up. And on the second time, I would trust it to break more than on the first time. So this is the first time. You know, if it comes back like this, bounces, this is the second time. So David talks about, you know, first retracement, don't trust kind of thing. But you don't know that this is the resistance because technically the resistance is right here of this body. So that's why I don't want to sell too much yet. It's kind of flickering right here, which again means no one's selling right now. So when prices like come like this, pop, and then just kind of pause, flicker like that, the next candle usually pops. So what I'm looking for now is on the 5 in the trend line. You can see we're not at the top of the trend line, but where it comes to the top of it, it's right here, right at this resistance. So that's where I would expect it to turn and pull back. Any questions so far? Anybody want to share like how this is helping them? This is so slow. It's like, come on, market, do something. Anybody have some good jokes? Just watching paint dry right now. Yes, Harry. It's just learning price action. And hopefully I'm explaining it to you guys so that you can understand it better. See that starting to pop up, starting to pop his head up. Almost at my goal, but right now I'm having to resist adding heavy because this is not a good place to add heavy. I'm still super, super light though. So um, I'll add one more than this. Just to see if I can hit my goal a little bit easier. There it goes. Pops. And if you look on the 15, my target is actually really good because it's below the wicks. Okay. What just happened? Why did I thought I had some zero TPs and suddenly they're all gone. Okay, well, I guess I only added 2 TPs at the top. See, I'm super close to my goal, guys. Look at that. I just need 40 bucks to 56.80 and I'm 2%. All right, I'm gonna, since I'm lighter in my position, I'm gonna add it back and go right there, 8. That's still a light position and the targets are still below the wicks. So I think we're okay. I was waiting for a pullback to add, but it's not giving me that. And right now, this is a stair step right here, stair step. So it should basically pop. So slow. You can see it's not even moving like 0.1 of a pip. So that's why I'm not adding anything, because it's the same level basically. Here we go. It's about to pop. And we're basically almost at the top of the range, or not the range, the trend right here. So that's why I want to, basically, this is the last of my ads. And I should hit my goal. If not, I would look for a sell position. Because basically comes up like this, then comes back, and then it goes up. Bam. And I hit my goal. So passed it actually. Okay. So that to me is like, yeah, really good. Because I had very little drawdown and pop the trades here. Oops. Show the trade level, show the trade history, and let's measure this. Let's start it here and end it here. Basically, that is 1.5 hours. It's less than that, but we'll just use 1.5. So basically 1.4% per hour. And we're at 2.13%. Okay, so with that, I'm gonna post this and close off the night. Hopefully you guys learned a lot, and if you were following along, hopefully you profited. Oh, need to screenshot again. Okay, with that, I'm just gonna stop recording, and you guys have a great evening.